Big news today as Cathie Wood starts to exit the Ethereum ETF race, and we'll break all this down for you, what this might mean for Ethereum, and is there another alternative amidst? We'll take it all in. My name is Paul Barron. Welcome back into Tech Path. Before we get started, I want to thank our sponsor, and that is Wilder World. If you're looking at a new dimension of reality, check out Wilder World, of course. Go over and follow them on Twitter. This is a good spot to kind of catch up with what they're doing. They had a huge event in Austin, which was one of the biggest events there during Consensus. Wheels Arcade in Austin. You guys can kind of see some of the footage right here, but they had a lot going on in terms of games, presenting a lot of the new features within Wilder World, and definitely, I think, one of the leading projects out there in Web3. So make sure and check it out. We'll always leave some links down below. Let's jump to this first tweet right here. Of course, everybody saw this on Friday afternoon, late in the day, and that is, of course, President Biden vetoed the bill that allows highly regulated financial firms, known as banks, to hold Bitcoin and crypto. So basically, this was SAB 121, issued by the SEC. President says, nope, we're going to hold the current situation. The SEC's position is the same, and that is banks will not be able to do that. That occurs, of course, happened all during the end of the week. He had, I think, till maybe Monday or Tuesday this week to actually do it, but he went ahead, vetoed it out there at the end of last week. A couple other points right here. Eleanor Terrett hitting on this. Apparently, my wording was a little confusing, so I'm going to say it again. The American Bankers Association asked Biden not to veto SAB 121, siding with crypto. So the banks wanted in. And I think maybe crypto wanted the banks. I'm not completely sure on that. But the point is that when you look at the American Bankers Association saying yes, that was a pretty big statement by, of course, the president and the administration. Now, how much of an effect does this really have on the current bills that are in place? This would include FIT 21, along with the stablecoin bill and many others that will probably be playing out before the November election. Here's, of course, an analyst, Bernstein, doubting that political influence in SEC's spot Ethereum ETF approvals are going to happen after Biden's veto. So what his point is right here, I'll kind of scan down in here. Given the president vetoed the SAB 121 repeal, the political narrative looks less credible and less likely that the SEC took a more pragmatic approach and avoided a legal battle. So basically saying, hey, we don't want to fight this out. We're going to go ahead and push the ETH ETFs through, and off we go. The SEC knew it was in a corner on the ETH ETF in the same regulatory setup as Bitcoin, which was proven and is now a huge success, of course. And the CME ETH futures market already signifying a commodity status. So that even makes it even more so overall. A couple of points that many people on X were kind of talking about here, of course, is Bankless kind of hitting on this. Biden just vetoed the only pro-crypto bill ever to come across his desk. Yeah, it's the first one, really. This was a layup, SAB 121, the anti-crypto rule, put in place by Gensler to stop banks from holding. Crypto hates it, the banks hate it, and all you had to do was not veto it, and you were in. This will cost the Dems. Now, this is the question mark. This position right here, because many people just simply say, right now, we've got three candidates. You've got Kennedy, you've got Trump, and you've got Biden. Many people would simply say, well, all right, this tells us clearly that Biden is anti-crypto. Trump is now pro-crypto, and Kennedy is somewhat pro-crypto. So how will the narrative play out, especially in this election, as we start to see things going forward? Here's Nate Garassi kind of hitting on this. A lot of Wall Street's dismissed crypto. So this is another factor that plays into this. They feel like they're above it or perhaps threatened by it. But ironically, many of the biggest minds he knows are actually involved with, or at least highly intrigued by crypto, and he's going to bet on those minds. So if you've got a lot of really smart people in Wall Street starting to lean this way, you've got pretty much the masses, a lot of retail, 50 million Americans starting to lean this way. Are we destined for a battle this summer around things like FIT, the FIT bill, as well as even the stablecoins bills as they play out here through the summer election months? All of that, I think, is still going to be giving us a narrative going forward. Now, I want to look at a clip real quick, because this is talking about whether or not FIT 21 can even get through. Take a look.
The Biden administration didn't come out and say back FIT 21, but they didn't come out with as strong an opposition to FIT 21 as they did with the SAB 121 repeal, where they came out with a pre-veto stance. So you're seeing just in a very short time period, a steep decline in the vehemence of the Biden administration against being anti-crypto. So all of that is great. To your shorter question about whether we see anything happen this year on FIT 21, I don't think, unfortunately, we'll see anything with FIT 21 this year. But that's just quite simply because we're running out of time in the congressional calendar, and we are in a presidential election year, which shortens it more than is ordinarily the case. However, just the fact of FIT 21 passing on the House floor, a bipartisan passage, and the number of folks that brought a yes vote for it is tremendous progress.
I think the tremendous progress is coming for very simple reasons, as it does with all situations in DC, when you see movement going quickly and happening so fast, because that's been kind of the statement of me, is that what changed? What really changed in DC to cause a lot of this? Well, part of what changed was this right here: Coinbase donating $25 million to crypto lobby group Fairshake. Now one of the biggest ones out there. I'll play something in a second, but this is following Ripple and A16Z, one of the biggest venture funds out there that are investing in this. Couple of points within this latest donation, Coinbase brings their total funding to $160 million right now. So that's a big one, because remember, they had already allocated like another $40 million back to back crypto and pro-crypto candidates. So already in the cycle, you've already seen this much money starting to hit DC. Imagine what's going to happen as we start to really accelerate towards the election. This clip goes into a little bit more about that, and that's the size of the current crypto lobby. Take a look.
I think it's really interesting how the crypto community is getting organized into basically a lobby to advocate for its interests, because
it's the biggest lobby in America. Did you know that?
Yeah, they've been so targeted over the last few years because Gensler and Warren have been on a crusade to basically make crypto illegal or drive it offshore. Well, every action has an equal and opposite reaction. And now the crypto people have basically had a political awakening and realized they have to get involved in the political system, just as a matter of defense, self-defense.
Back to the young people we talked about in the previous story, I think the reason they're attracted to crypto is because it doesn't have government control. And since if you don't trust the government, and you see the government over and over and over again cover things up, or the grift, or make decisions that are not in your generation's best interest, why wouldn't you opt out of their financial system? And you know what? There's a lot of them. And they're getting organized. To your point, Sachs.
If young people show up, it could be 500 basis points. I mean, young people do not show up to vote because there isn't an issue that they care about.
Correct.
But there's 50 million Americans that own crypto. 50.
Okay, so if 10% of them are, like, let's say that's their single issue, that's 5 million votes.
No. There's a plausible case where 40 million of those folks show up, because you're talking about a structural part of their wealth creation.
So they hit on really the potential here in terms of the impact on the election side of things, but it also starts to move into the investment appetite. And this is where Cathie Wood comes into play, because this is where it ties in what's happening within the ETH ETF. I'm going to go to this story right here. Ark Invest, out of the ETF race for ETH, ends their partnership with 21 shares. Now, there's a couple of points that you could look at right now and simply say, remember when Ark stepped out, part of that was in response to, or we could assume that is in response to the fact that staking was removed off of the table for putting this within these ETFs. If that is in fact the case, and we already have seen very successful staking security products out there, if you go back and look at Biddle, go back and check one of our own interviews with Biddle right here out of Miami, and what they've been doing with BlackRock. Could Cathie be kind of queuing up something like that? Are we in a position right now where Ark could be looking at a whole new structure to get into the staking game of all of this? Because there's a couple of things that are happening that kind of tie this together. One, of course, is this right here. Ethereum ETFs may have ended the SEC's war on crypto. Now remember, SEC is the one that is very anti-staking, the whole concept around that. Even though we know many of these other security assets, when you start to bundle them, come together under the SEC for approval, much like what we saw with Biddle. This, of course, I think also lines up very interestingly with where Ark could be going down the road with maybe a new product. So if you look at the approval of the spot ETFs, was the kind of the chef's kiss on what could be described as a banner month for crypto policy, and the move could severely undermine the SEC's ongoing crypto crackdown. The reason I say this, if you combine this with the political appetite, you combine this with a whole bunch of people owning crypto and voting pro-crypto, and then starting to look at trying to find assets that they can invest into, Cathie Wood could be lining up with the right product at the right time, in the right political environment, in the right regulatory environment. Everything starts to kind of come together. I want to go further into this, and this, of course, is right here. Eric Balchunas, he was talking about 21 shares doing the ETH ETF solo now. ARK obviously dropped out, document name, but they're still remain as partners on the Bitcoin and the futures. Remember last week we played a clip that Cathie Wood basically said, hey, we're losing money on the Bitcoin ETF, and we know it. And she made some interesting statements in that interview that we played. And that was, we think there's some other options. If that is the case, maybe this starts to line up. And remember, if you kind of think about what 21 shares is looking at in terms of other options, which is what is the highest potential candidate for that, look at who is the staking leader in their holdings right now on 21 shares. It would be Solana. So all of this starts to play into some very intriguing things that are setting up. Point is, there's a lot of chess moves playing out right now, politically, regulatory, and also from an investment category, because we are now seeing really the 12th sector being formed right in front of our eyes. So a lot happening out there for sure. This is a clip going in to kind of reiterate on this very point. This is Bloomberg. Take a look.
The importance of a spot ETH ETF.
I'm going to push back on that slightly, Ed, and my personal view is that we're not going to get a lot of demand for this product. It's not a good product, bottom line. It's great news for the industry in that it increases awareness and it brings in institutional funds that cannot invest in anything that is not listed on a regulated exchange. But as for, is this a good product? It's not going to be distributing staking rewards, which means that anyone investing in this product is foregoing roughly a 4% yield. For many, that's a convenience fee, but for professional investors, that's a hefty cost to have to justify to your clients.
All right, and you could say, all right, well, she is right. Yes, if you are investing in ETH, you've got a lot of different options out there other than going to an ETF where you can get staking rewards, where you can go in and just play the open markets. Yeah, all of that is quite a bit different than when you're looking at something like a Bitcoin ETF. So all of this plays together. You look, as I said, we've kind of painted up a scenario here of regulatory, the political landscape, and the potential here for a new investment category starting to play out. Could ARK maybe get a leg up because they've been kind of going head to head with BlackRock on the Bitcoin ETF and they've lost? Is this maybe their open window taking something else out in terms of an innovative product item? We'll see how all this plays out. But of course, we'll bring more to you guys and cover all of that right here on the channel. If you're not in the Diamond Circle, make sure and get in right now. It's a great place to get additional content. Of course, if you're not following me on X, do that. It's just @PaulBaron. We'll catch you next time right here on TechPath.